talk about Jubilant Food now. If you look at the third quarter performance, well, if you look at the profit, that's actually seen a 36% fall to come in at 88 crore rupees. This was 137 crore rupees a year ago. Also missing estimates when it comes to margins, and revenues seeing an uptick of about 10%. That's how the stock did yesterday, down by about 6.5%. Now, what's interesting is that Morgan Stanley remains overweight on Jubilant Foodworks, even as it flags off near-term demand weakness. My colleague Vinny joining in live to bring us up to speed with this. Good morning, Vinny. So what's making Morgan Stanley so jubilant about Jubilant?
Absolutely. When you look at Morgan Stanley's report, yes, they're still maintaining that overweight rating, but do not forget, because they've cut their target price coming in. So now the target price is at 560 rupees. Previously, it was 624 rupees. Now, yes, there was a weak performance that came in Q3 from the company. Negative operating leverage is actually something that hurt the margins of the company. And what Morgan Stanley is highlighting is the near-term demand weakness also seems to be continuing for the company. And one key factor is that, what the company has actually highlighted, a decrease in value proposition of a Domino's brand in consumers' mind is a key factor that they have highlighted in the report, and this is coming in from Morgan Stanley. Now, Macquarie too is actually maintaining their underperform rating, and they too have cut their target price by around target price coming in at 380 rupees versus previous target price of 445 rupees. They're also cutting their EPS targets as well. And obviously what Macquarie is also saying that the stock has actually failed to price the limited visibility on demand and margin recovery, and risk of an elevated capex outlay is a concern that they are flagging off as well. JP Morgan too is actually maintaining their neutral rating and have cut their target price as well. So we are seeing target price cuts coming in from most of the brokerages for Jubilant Foodwork. So that's an important factor to watch out for. But let's go across and listen into Sameer Khertapal, who's actually highlighting some of the consumer trends, that how they're gravitating towards the lower price point, and that is a very key important factor that indicates about the consumer trend as well. Let's go across and listen in.
The focus area is dine-in, and customers at this high inflationary environment, they're making choices. And we do see customer come with a total bill or total amount in a mind and a total quantity, and therefore they tend to gravitate towards lower price point. So as we are kind of competing for new customers, we believe given our scale, our ability to deploy technology, our reach of stores, we can actually capture that demand if we have a very strong 49 rupee price point menu, and that is where we are doubling down on. It is not that the customers that is a challenge. Again, I'm pivoting and saying that if we are the only ones who can offer a 49 rupee menu, then we should be acquiring customers at a faster rate, and that is what we are correcting in our marketing communication.
At this stage, we would not like to take any further price increase, and we would like to continue to drive value proposition because the focus would be more on bringing volume and growth back to the levels that we were anticipating, and not really take up prices at this moment.